Early exchange, shaping policy, advancing development.
Now to our big story for today, which is to look at the outcome of the MPC meeting held yesterday by the CBN. In its wisdom, the CBN, in a bid to curb the rising inflation in the country, decided to increase the benchmark interest rate, which is MPR, from 26.25% to 27.5%. The question is, what will be the impact of this decision on businesses and how the business community is receiving this development? Let's begin our business of shaping policy in this regard by bringing in our special guest this morning. We're being joined by Gbolahan Olojede, who is a public policy analyst. Gbolahan, glad you have you join us on Early Exchange this morning. Good to see you again. Let's start this conversation. The essence of having you on this segment is to review some of the decisions taken by the CBN. Let's start by looking at the monetary policy rate, which is the MPR. In its wisdom, the CBN decided to increase its, the benchmark interest rate from 26.25% to 27.5%. What do you make of this decision and the development that may likely arise as a result of this decision?
It's a very difficult situation that the CBN has found itself. It has been trying to use the rate to control inflation. It has a mandate to bring inflation under control as part of what is expected of the CBN. And the critical tool that is available to the CBN is to use the monetary policy rate to do this. Let me also say that in most developed markets, which also faced rising inflation over the past since post-COVID era, this particular tool have been used successfully in developed markets to bring inflation under control. But the question is, the nature of our own economy, the drivers of those inflationary pressure, are they exactly the same as what we have in the developed markets? We can look at examples or why this may not be so. Number one is the volume of money outside of the financial system in our own environment, vis-a-vis those developed markets. In the developed markets, you will find yourself with friends, and you're trying to find a $5 bill, and nobody has it. Because literally everything you want to do, you can do it without holding cash. I can go to a supermarket in America. Even 20 years ago, when I lived there, I could pay at the supermarket with my check. So those kind of environments are totally different from our environment, where a lot of money is outside of the financial system. And this restricts the effectiveness of monetary policy rates in bringing down inflation. That is number one. The other part of that problem is that we have key drivers of inflation like food. Food is the number one, with over 40% inflation year on year. Some might even argue that if we rejig the bucket of items and the weight we ascribe to them, we might find out that food inflation is actually much higher than the 40-something% that we're talking about. So where your key driver is something like food, you must now ask yourself, how does increasing rates help you to solve the food problem and by extension, the inflationary pressure being driven by food inflation? The answer is the correlation is very low. So this is what we have been witnessing. The effectiveness of the monetary policy hike has not delivered the goods. It has not taken us where we need to go, at least not fast enough. Yes, CBN might say, oh, I'm making some little baby steps, because the rate of increase of inflation has been slowing down. So while you have the absolute year-on-year inflation figure going up, the rate at which it is going up is slowing down. That might be fairly complex. but that is what is going on. But that is almost unnoticeable because it is tiny, and it will take a long time of those tiny, tiny pieces of slowing down before the inflation curve can actually flatten and then take a new direction. So the best bet to be if you can get a robust support on the fiscal side of things to deliver the goods faster.
All right, Gbolahan, nicely said. I like that you've been able to establish that increasing the MPR rate has not so far reduced the inflation rate in Nigeria. But looking at that, having had this is the fourth MPC meeting so far in this year. So having increased the rate from the first MPC meeting this year up to the third and then before the fourth was had, what do you think was the rationale behind the CBN consistently increasing MPR rate? Now, you also said that most of the money supply, there's so much money supply out of the financial system. Cash reserve ratio has been kept at 45% by the CBN to still try and mop up the cash, or at least keep some supply within the financial system. This too has not also reduced inflation rate. So what then could you say is the rationale behind increasing MPR rates and leaving cash reserve ratio at 45%?
Well, you see, at the junction where we're at right now, the CBN cannot actually afford to start dropping rates. The way it should work theoretically is that you are watching that inflation curve and you wait for that inflection point. When you reach that inflection point, or at least when the curve has flattened, then you can begin to drop rates. Our curve has not flattened. So it might even remove the little baby gains that the CBN might say if it should try to drop rates right now. So while it is increasing the rate, you will also observe that increasing the rate this time around has been dramatically smaller than what it used to be. I think the last increase was like 200 basis points. This time around, it was about 50 basis points. And I guess why, maybe it could have held it firm without increasing it. But considering the fact that we are walking into another season that will pump money into the system, we have moved minimum wage from 30,000 to 70,000. There will be consequential adjustments. So all of these things are going to exert inflationary pressure again on the system. And the CBN must be anticipating that and saying, look, while I cannot afford to increase this rate dramatically, I must do something in anticipation of the pressure that will come by virtue of the new minimum wage. This might be what has informed the fact that CBN still decided to go ahead and do a 50% basis point increase. What it will need for sustainability or for us to get to that inflection point on the inflation curve is a robust support from the fiscal side, in my opinion. Deal with those issues that will support what is going on the monetary side, and we can get to the destination faster. As it is, things are very slow. If you take the curve, what are you going to see? You see a curve that is still rising, but the rate at which it is rising is probably slowing down little by little. At a point in time, it is believed that it will now flatten. When are we going to get to that point? Will monetary policy alone get us there? My answer will be no.
As much as the decision by the CBN to increase the interest rate or hike it might be criticized, the CBN has also provided a kind of explanation for that, which is the fact that it has also led to increase when it comes to capital importation, which is to the tune of $5.9 billion. I'm also talking about diaspora remittances and also the issue of cash reserve, which is about $37 billion. How do you justify this kind of explanation for the hiking increase in interest rates as done by the CBN?
Well, those, you see, everything and anything that will increase the total supply of money in the system is believed to have the capacity to exert inflationary pressure. So some of those items that you listed right now have the capacity to increase that money in circulation. So CBN would definitely, because they have the numbers, you and I may not have those, but they have the numbers, and they must be seen to be taking steps to preempt and take measures that will moderate the inflationary pressure that any of those items I want to exert on the system. So it is unfortunately for us, some of these things have their other side. But a lot of them have their other side. The ability of the banks to create loans, the ability of consumers and manufacturers and small and medium-scale businesses to borrow from the fund, from the banks, and all of that. And if borrowing has become difficult, go and look, for example, at even commercial papers. Commercial papers, the rates, the amount being raised has slowed down. I think quarter one this year probably was the lowest of the past 5 quarters of people trying to raise commercial papers, because the commercial papers that you could raise at 15% about a year ago or thereabout, you will now be preparing to raise it at 25%, since the rates have dramatically gone up from that time. So it's a very challenging moment for CBN. It must do what it needs to do using the tool that is available to it, despite the fact that the gains from using that tool is so minuscule that it will take a long time of monetary policy before we can get to where we need to get. And I will say it all over again, our best approach is for CBN to, discuss with these other guys at the fiscal side of things, see what can be brought on the table. Let me give you an example of something that dramatically changes. Food. If we get food in the street, it would dramatically change the scene. Number one, a lot of people today are spending a chunk of their income on food. So somebody who used to spend 50% of his income on food is now spending 75% or 90% of the income on food. So he doesn't have disposable income left to consume other things. If these people are unable to consume other services and goods, then there will be inventory pileup, which will affect profitability of those manufacturers and service providers. So it's a vicious cycle. And being able to sit at top and look at everything from an umbrella perspective and make an integrated decision is the real challenge. And I'll put that challenge not even at the doorstep of CBN, but at the Minister of Finance, who is also the coordinating minister for the economy.
Now that you dropped a challenge at the doorstep of the CBN, now let's get some soundbite from the CBN governor, Yemi Kadusu. We'll return to the conversation after this.
Diaspora remittances. In addition, members noted the efforts of the federal government and private sector towards improving domestic refining capacity, as this is expected to reduce foreign exchange currently being expended on the importation of refined petroleum products. The NPC noted the sustained resilience of the banking system, reflected in improvements of key financial soundness indicators. Members further encouraged the continued need for close monitoring of the system as the implementation of the recapitalization exercise progresses. To consolidate on the gains thus far achieved, the committee re-emphasized its commitment to stay on course with its tightening cycle in view of the urgent need to address inflationary pressures. key developments in the domestic and global economies. According to the National Bureau of Statistics, domestic headline inflation rose marginally to 34.19% in June 2024 from 33.95% in May 2024, driven by the continued rise in the year-on-year components of food and core inflation. Similarly, month-on-month headline inflation rose to 2.31% in June 2024 from 2.14% in the preceding month. The food and core components rose to 2.55 and 2.06% in June 2024 from 2.28 and 2.01% in May, respectively. Real GDP year-on-year grew by 2.98% in the first quarter of 2024, compared with 3.46% in the fourth quarter of 2023, driven by both the oil and non-oil sectors.
That was the CBN governor there, Olayemi Kadusu, talking about the outcome of the 296th Monetary Policy Committee meeting that was just concluded. Now, getting back to our guest, who is a public policy analyst, Gbolahan, who's still with us. He joins us virtually this morning, looking at some of the components of the decisions reached by the MPC at the last meeting. Now, the CBN governor highlighted some of the reasons for the increase and then what some of the things that could happen to help. First, he started talking about increasing domestic refining of petroleum products. You recall that over the last 1 year, some of the reasons for the increase in inflation has been the removal of fuel subsidy and then the floating of the naira. Looking at food inflation, which has been the major reason for the spike in Nigeria's inflation rate, let's look at how this plays in. The removal of fuel subsidy, increasing the cost of transportation, logistics for food brought in from different parts of Nigeria. Now, if the CBN has done its bit by tightening monetary policy rates, and the other part of the job is now left for the other stakeholders, what can be done in this aspect?
Well, we need a more coordinated approach to issue. The CBN was deliberate about putting words out there about the refining. So now, the domestic refining capacity held a lot of promises that Nigerians have held on to for a number of years. We have been expecting that domestic production will start, and it will do two major things. Number one is that domestic refining will help us conserve all those effects these effects are hard-earned, and we keep using it to purchase refined product from other countries and bring back to Nigeria. Behind that importation is also a huge, a dark hole of unaccountability that are associated with issues of subsidy. So domestic refining will have helped us to solve that problem significantly on one hand. On the other hand, we will be able to produce. Imagine that the government refineries are working. Dangote 650,000 barrels per day refinery is working. We will produce more than enough for us to consume, and we will have the capacity to export. When we export, we earn foreign exchange. So this domestic refining capacity holds some promises that can make a significant impact on our economic circumstances. It will create jobs, it will save FX, it will earn FX, and we might even have a little savings on the cost of fuel, because it means that all those monies that are being spent on establishing LC, bringing in fuel from Kazakhstan or wherever we buy it into Nigeria, so there is logistic issues that are involved there. That some of those monies can be saved and it will dovetail into some marginal savings for the consumers of the product in the country. Now, the details of this are not within the control of the CBN. But the impact that will happen when this is put in place are also part of the business of the CBN. It doesn't control how it will happen, but when it happens, it affects the CBN. So that's why it's putting it out there. Let us be able to tidy something like that up. The last 1 week has not been pleasant with the kind of news that were there, the kind of arguments, relating to refining company of Mr. Dangote. We need to solve those and keep them out of the media. The parties should work together and see that project as just beyond the private refinery project. That's become more of a national must-happen project. So work together and make it happen. It has huge economic implications for Nigeria.
All right, still on the issue of, improving the capacity of domestic refining of petrol, you agree with me that that sector is very sensitive. Anything that happens to that sector will also influence the economy in Nigeria. But here is the issue here. How many Nigerians, you have Dangote, who has built the largest single refinery in the world, about 650,000 barrels per day. But the question is, what can the federal government do to improve the capacity as regards local refinery? You get the point that sourcing for the fund is not that easy. How many Nigerians can do what Dangote has done? And you're also aware of the challenge or the issues Dangote is dealing with now, his outcry as regards effort to allegedly sabotage its local production. What are other critical issues that the federal government needs to address or take to encourage local manufacturing or refinery of this product? Then I also wanted to look at the fact that the industry itself, you have the Local Content Act, which is supposed to have facilitated these. But how has it been so challenging that even with the Local Content Act, this has not been done as regards improving the local capacity when it comes to refining of petrol? Please talk to us.
I think where it all starts from is the transparency, the level of transparency in that industry itself. A lot of things are shrouded in secrecy. A lot of things are not available to the public to understand the basis. For example, why is fuel 610? Why was it 610? Or why is it 750? Reasonably, we should have been able to know those things. They are not things that are meant to be shrouded in secrecy. Are we back to subsidy or are we not back to it? Things like that are also not spoken about. So there's absolutely no transparency about what is going on in that particular space. I do not think, or maybe I'm one of those people who do not believe that there is much to be gained from a common good perspective. There is not much to be gained by keeping all these things secret, telling all the half-truth. And you remember how many times we have been told that the government refineries will start to produce refined products? Even the Dangote refinery, it will be this month, then it will be the month after, then it will be the one after, then it will be the following year, it will be the second quarter. That is how we have been fed the information coming from that space. So we need to first of all get issues around transparency right. Oh, your diesel is 1,600 ppm. Oh no, it is not. It is 85. It is 50. all these issues will not help us. Number two, when I've had people say, oh, Dangote is the monopoly. I mean, something like that also was part of that speech that became contentious. Now, the question is, if you say Dangote is a monopoly, is that a way of telling us that those government refineries that we have been spending money on over the past 2 years, for which a lot of promises are being made, are we saying that we're not expecting them to produce anything? Because those refineries together have a capacity for about 445,000 barrels per day refining. Are we saying they won't produce? If they are going to produce, then how come we still see Dangote as a monopoly? So government need to be more forthcoming and be honest about what is going on. Are those refineries going to produce or not? Have we run into trouble? If they are going to produce, when are we going to see? To stop all this, it will be January, it will be February, and then you run out through an entire year and start the next year, talking about promises about when refineries are going to start. Can we have a bit of honesty as to some of these things? Refinery is not brain surgery. Brain surgery has its own predictability when the surgeons are talking about it. So when will the mechanical completion is over? When will commercial production start? Is it not possible to tell us? It's not possible to estimate. So why is everything in secrecy? So the number one issue we have to deal with, the government has to deal with, is being a bit more honest, being a bit more transparent as far as what is going on in the oil and gas or in the refining space is concerned. The second part is to look at those policies that may not make it. For example, how come so many other people that pick the license for Mr. Dangote have not built the refinery? So there might be some things that do not add up. And when an investor cannot see through his investment, he will hold back his money. What will make an investor be able to see through his investment? Issues around the legal framework. I'm glad that the PIA has passed into law. Then issues around transparency in the industry. I know exactly what to expect. I know what I can estimate reasonably what my cost will be. I can estimate reasonably what my returns will be. Making those things easy for an investor will attract more people. As far as government itself is concerned, its duty is primarily to provide the right environment, not to go into those businesses. In fact, when those government refineries are finally brought into work, I want to believe that the intention will be to, concession it out to the private sector to go and manage. Government cannot manage any business. They've not shown any capacity to manage business success. They can't even print money, successfully. We do a lot of importation of our forex into this country. So you can't entrust enterprises with a government that is like that.
Now, looking at the situation, several issues have been raised. Now, from the regulator, the NMDPR, one issue that was raised was quality of domestically refined product versus quality of imported refined product. Another is also the non-availability of the product. There was a time where Nigeria was producing about 1.9 million barrels per day, and the target was to move from that to about 2.3 million barrels per day. Now, Nigeria produces between 1.3 1.4 million barrels per day. Now, what is the challenge with increasing capacity for production to be able to satisfy local demand for crude and also export? And then thirdly, this kind of situation, what sort of message does it send to other investors who may want to come into the space, the refining space, as we see that a lot of people rather do import than invest in domestic refining of petroleum products?
Okay. If like I said, if investors cannot see through their investment, they're not going to invest in refining. Rather, the importation is pretty straightforward. It's easy. I buy at this much, I sell at this much. As simple as that. And if government is saying, oh, well, you buy at this much, I want you to sell at this particular price, but I will pay you the difference. So, whatever the arrangement is, it is easier to just import and sell. When you go into refining, that is core manufacturing. It is a much more challenging. And if we're going to bring more people into that space, we need to reform the space, make it possible for the investor to see it. They will come and they will invest in that space. Anything other than that, we're not going to see any improvement. Then you spoke about how the event that of the last 1 week, in fact, other people who are watching, we've been going out to every part of the world asking investors to come to our country. But my people said, when a man steps on his own cloth, then he can tear another person. So they are watching, they are seeing how the investments by your own person within your economy is being treated in the public glare. And you are asking them to come from their own country and bring their own money. If you treat your own person like that, how will you treat them? That is the message, and that message is wrong. I'm delighted that it seems as if the decision makers have realized that that is not the way to go, and they are trying to recover that mess that was created in the media over the past year. Hopefully, the deliberations are ongoing, and we can resolve it with finality for the benefit of the people. All the political, issues that might be associated, deals issues that might be associated, let them go and deal with all that back. What Nigerians are looking forward to is that their hope and promise of that particular refinery will happen. And it is the duty of government, it is the duty of those regulators that are coming out there to malign the operator, to work with that operator to ensure that that project is delivered. When things like that happen, it encourages other investors who can look in there and say, oh, it is possible.
Away from the conversation on the local refinery of petrol, now let's look at the impact of this decision on businesses, most importantly, small businesses, medium-scale businesses. How do you think the business community will adjust or react to this initiative or development by the CBN, the decision to hike the benchmark interest rate, and what will be the impact of that on businesses henceforth?
Well, it's a structural for business. Whether you have an existing loan that you service, what typically happens is after all this revision, the banks will start to write you to say your interest rate. If you don't already have a loan, trying to get a loan, by the time you see the price, because the banks are going to factor in this NPR, it is called the benchmark interest rate. So it forms a basis for determining what will be the interest rate. I mean, a gentleman from one of the mid-sized banks was in our office sometimes last week, and he had presented some of the product from his bank to me. And I said, what is the pricing? He said 37%. I said 37%? And I'm asking myself, at 37%, how many people will consume this product? Then even when people out of desperation decide to consume those products, does this not represent a potential bad loan? After you have, granted the loan, they take it if it is for a legit business and you're doing the business, you find out that you cannot pass on the full cost. I mean, that is just financing cost to the guy still has other costs. The operational costs are there, marketing, all other costs are still there. But financing alone is already 37%. What will be the profit of that guy? Will he be able to meet the obligations on that loan as at when due? Are we creating a potential for increased loan default in the system? Those are the questions that this continuous rise or raise of interest rates puts on the table for us to begin to address. So the earlier we can get things back on course, the earlier we can, create an environment where we don't have to increase this interest rate every 2 months, the better for the economy. Otherwise, the impact on SMEs, on manufacturers, on borrowers generally is huge. And eventually, if the trend continues, it will boomerang on the financial system itself by rate of default on loans.
This not to have a boomerang effect on the banks, even as CBN is advocating recapitalization of the banks. What should be done at the next MPC meeting, which will be in September?
At the next MPC meeting, maybe we might be lucky and the inflation numbers are looking better, either by virtue of having flattened out or there is a dramatic reduction in the rate of increase. When that happens, at least we can expect that rates will be held firm and not increase any further. Then as the progress continues and that curve improves, then we expect rates to start dropping cautiously, maybe by the first quarter next year.
Most importantly, small business owners now. The reality is here, the decision has been made, the hike in the benchmark interest rate, which in coming days, they will start feeling the impact of that. You also talked about the tendency for loan defaults, which might likely affect businesses. Now, what will be your admonition to business owners as how they can survive this kind of crucial time, given the development and the reality that will play out in coming weeks and months before the next MPC? How do you think business owners can survive this terrain with this reality that they are battling with?
It's a very challenging one for them because, I will say as much as possible, avoid piling up expensive debt or piling up further expensive debt. Maybe keep it at where you are. And then look at other possible financing structure that will help you weather this storm. This is a good season to think around issues like equity kickers or what you call equity sweep, which you can layer on top of a convertible. So what that does for you is that you can get investors who are willing to take a less than market rate interest rate now, while there is a promise of an equity sweetener at the end of the tenor of the convertible. So, just look for common equity, or even if it is redeemable equity, look for equity-like structures. But this is a real good time for equity kickers where we can get a lower rate, a lower than market rate, with the promise that the investor can get a bit of equity at the end of that scheme.
Away from the MPC meeting, but still on inflation, food inflation is at about 40.78%, or a bit over that. So it's almost 41% and might keep increasing because the factors that lead to increase in food inflation are still very much alive. What can the CBN and even Nigerian government do to tackle that issue? Is it time to begin to give subsidies to farmers, to those in the agriculture sector?
Yeah, we need to look at what are the problems with food production and then begin to cure those problems. They are well known. Incidentally, even the government itself knows most of those problems. So starting with the planting. So let's be able to make things like enhanced seedlings available to farmers, fertilizers available to farmers. Let's be able to have tractors and all that available to farmers who are doing planting on a larger scale. Let's be able to educate farmers on best farming practices. One of the problems with our food production is the yield issue. And some of these items that I listed can help us to manage issues around yield. What is the yield issue? When you take a hectare of land in Nigeria and you plant maize, the amount of the number of tons of maize that will come out at the end of the cycle is less, much less than what you will see from, say, a South Africa farm with the same exact 1 hectare planting the same product which is made. So something is wrong with our farming practice. So we must improve the yield. Beyond that, issues around disconnect from the centers of production, between the centers of production and consumption must be dealt with. So if there are transportation issues, very bad rural roads that connect centers of production to centers of consumption, all those issues are potential areas for intervention. We should also look at those food areas where in the short run, we cannot ramp up production significantly and look at the possibility of importing to fill the gap temporarily while we build our own capacity along that. Issues around some insecurity, things are still there. Let's also deal with all of that. If we deal with most of these issues, we probably will arrive at the junction where there is more food in the economy, and that will help us tremendously in dealing with a lot of the economic issues that we have faced. Just fix food alone, and maybe 40% of the problem might just walk away.
Now, Gbolahan, let's look at another reality that may play out in coming weeks or months. A few days ago, the federal government decided to increase the national minimum wage to 70,000 naira, which has been, established. Now, let's see the impact of these on the hike in inflation that Nigeria is battling with presently. You have a double-digit inflation, and that has been on for years. What may likely be the impact of these for even business owners who are struggling in business as we speak, compiling with this, adhering to the provision of the national minimum wage, ability to pay 70,000 naira, and also for consumers as well, their purchasing power. So let's look at the decision made by the CBN governor yesterday and also the hike in inflation rate. What will be the impact of increasing minimum wage on these factors?
Okay, there's a bit of protection in the law already for SMEs, because for SMEs, if you hire less than 25 people, then you are not compelled to adopt the minimum wage issue. So that's some sort of protection. But even for businesses that hire more than 25, the minimum wage implementation and the consequential adjustment is when you move the lowest person to 70,000, and he has now come at a salary parity with his own boss, then you must move his own boss further up. So the implication of all of that is that the wage burden on businesses will go higher. We might witness a situation in which there might be some retrenchment by the time some of those bigger businesses that hire more than 25 people do their numbers. When they do their numbers and they see that, if I have to obey the law, then I have to let some people go. So we might see a situation in which some employers will let some people go so that they can manage the rising cost of personnel in the system. Those are part of the problem. However, for those who are able to pay, there are people who are not beneficiaries of that 70,000 minimum wage, and they believe they should have their own cut of it. So they hike their own prices to say, look, you are now earning, for those people at the minimum wage, you are at 30, you are now at 70. That's more than 100% increase. I think about 133% increase. So they want a share of their own. So we may also see people putting, something on top of their own prices landlords trying to increase their own rent, and all of that will exert additional inflationary pressure, which has to be managed somehow. Still, the authorities, the fiscal and the monetary authority. So it's challenging days ahead as we see how this will play out in reality in the economy. Although some of those things are predicted, like I've just listed.
Now, as we wrap up, let's look at the issue from the side of the markets. The markets woman doesn't discriminate between who is an employee of the federal government or who is an employee of a private organization. So when they go to the markets woman hearing that minimum wage has been increased, there's a tendency that when minimum wage increases, the prices of goods and services also increase. There's also been talk about having some form of price control. Would it be possible, and should that happen now?
Price control is something we should avoid as much as possible. It doesn't help in the economy. Most of the time, it's open to abuses. Rather than adopt price control, we should work on the supply side of those goods, especially if it is food items that we're talking about. Let's work on the supply side. If the food is available, the market will help to determine the price. Of course, in certain instances, government will do a walk around, try to see or appeal to people. This could be done by moral suasion, using different levels of leadership, government, traditional ruler, religious bodies to, drive moral suasion. But direct intervention and price control is not something.
Public policy expert, we just have to appreciate you for your time. We just have to wrap up the conversation now. We hope to have you another time to look at another development in this line. Thank you so much for your time and your thought on the issue of this decision made by the CBN.
Thanks for having me.
Early exchange, shaping policy, advancing development.